Hi everyone, this is Attorney Osedula II, and I'm a certified public accountant as well. So in this video, I'll be discussing the Truth in Lending Act. So this is one of the topics under RFBT, Regulatory Framework for Business Transactions. So if you are an aspiring certified public accountant, please watch this video and it might help you in your study of RFBT. So, one of the subtopics under RFBT is the law on other business transactions. So, there are subtopics under law on other business transactions or OBT. First is the PDIC law. Second, secrecy of bank deposits. And in this video, the Truth in Lending Act. The other topics will be discussed in separate YouTube videos. We also have Anti-Money Laundering Act, which is 6%. We also have Intellectual Property Law, Data Privacy Act, which is 3%, Electronic Commerce Act, Ease of Doing Business and Efficient Delivery of Government Service, or the Anti-Red Tape Law. We also have Labor Law and Social Security Law. So, you might be focusing so much on other topics like law on sales, credit transactions, but that's just 3%. Okay, so in law on sales, there will be 3 questions for RFBT. So out of 100 items, 3 questions lang for law on sales. You might be ignoring other topics such as PDIC law, secrecy of bank deposits. So how many percent is the law on other business transactions? So here, effective October 2022 examination, Anti-Money Laundering Act 6%, Data Privacy Act 3%. The rest of the highlighted topics 2%. So 2%, 2%, 2%, 1, 2, 3, 4, 5, 6, 7, 8. 8 times 2, 16% plus 6, 22 plus 3, 25%. So yung law on other business transactions is 25% of the entire exam for RFBT. So if 100 items yung RFBT, so there will be 25 questions under this topic. So if you want to check the RFBT syllabus, kindly check the description in this video. So, law and point, we have the Truth in Lending Act. So, it was approved on June 22, 1963. So, quite an old law considering it's 2022. So, describe the purpose of the law. It is one of the objectives. And we also have illustrate the obligation of creditors to persons to whom credit is extended. So, under this, we also have to compare the covered and excluded transactions and describe the consequences of non-compliance with obligation. So only 4 topics but 2 questions under Truth in Lending Act. So sana matama natin pagdating ng CPA board exam. Okay? So the Truth in Lending Act has been described as the growling financial watchdog of helpless borrowers. So in one of the Supreme Court case, so it has been called as the growling financial watchdog of helpless borrowers. So at the end of this video, you will know the reason why it is called the growling financial watchdog of helpless borrowers. So the Truth in Lending Act is Republic Act number 6735, or an act to require the disclosure of finance charges in connection with extensions of credit. So from the title itself, you'll know the reason behind the law. So the disclosure of finance charges in connection with extensions of credit. So in case of a contract of loan, there must be a disclosure of finance charge. Kung magkano yung interest rate, okay? So what else? Charges also includes penalty. Kung late payment, dapat meron nakalagay na provision in the disclosure statement. But what is the purpose of this law? So it is hereby declared to be the policy of the state to protect its citizens from a lack of awareness of the true cost of credit to the user by assuring a full disclosure of such cost. So with the view of preventing the uninformed use of credit to the detriment of national economy. So the rationale of this provision is to protect users of credit from a lack of awareness of the true cost thereof, proceeding from the experience that banks are able to conceal such true costs by hidden charges, uncertainty of interest rates, deduction of interest from the loaned amount, and the like. The law thereby seeks to protect debtors by permitting them to fully appreciate the true cost of their loan and to enable them to give full consent to the contract, and finally to properly evaluate their options in arriving at business decisions. Loan and credit arrangements may be made enticing by or sweetened with offers of low initial interest rates, but actually accompanied by provisions written in fine print that allows lenders to later on increase increase interest rates unilaterally. So without the consent, they are increasing the interest rate without the consent of the borrower and depending on the complex and subjective factors. So because the borrowers have been lured into these contracts by initially low interest rates, the borrowers get caught and stuck in the web of subsequent steep rates and penalties, surcharges, and the like. So being ordinary individuals or entities, they naturally dread legal complications and cannot afford court litigation. So they succumb to whatever charges the lenders impose. So kung mangungutang ka naman and magbabayad ng malaking interest, instead of going to courts, parang naisip nila, instead na magbayad ng abogado, magbayad ng filing fees, bayaran na lang yung interest dun sa creditor. So, before we proceed with the obligations of creditors to its debtors, let's find out what are the covered transactions. I find it proper to compare the covered and excluded transactions. So, what are the covered transactions under this topic? So, what does the term credit means? Okay? So, ito na yung mga covered transactions natin. So, number one, any loan, mortgage, deed of trust, advance, or discount. So, basically, a contract of loan is covered by this law. Second, any conditional sales contract. Also covered are contracts to sell, or sale or contract of sale of property of or services. Ayan, contract of sale of property or services. Also included is a rental purchase contract. Ito yung mga rent to own naman. Mga rent to own na contracts. What else? Any contract or arrangement for the hire, bailment, or leasing of property. So what else? Any option, demand, lien, pledge, or other claim against or for the delivery of property or money. So yung mga sangla, kasama rin dito. Covered transaction din siya. So any purchase or other acquisition of or any credit upon the security of any obligation of claim arising out of any of the foregoing. So any transaction or series of transactions having a similar purpose or effect. So kasama yan sa mga covered transaction natin. So basically ito, mas may application to in contract of loan. So contract of loan, the bank being the creditor or yung nagpautang and yung individual being the debtor. So excluded transactions is a credit line. Yung credit line kasi excluded siya kasi hindi pa naman siya contract of loan. So it is a preparatory to a contract of loan. So yung credit line or meron kayong credit arrangement, ano pa lang yan? Excluded transaction yan. Wala pang consummated na contract of loan. So excluded transaction yan. So we go back to, since alam na natin kung saan covered tong transaction, let's go back to the obligations of creditors to persons to whom credit is extended. Siguro yung author nung syllabus, he could have used another term for this eh. Persons to whom credit is extended. Could be a debtor, di ba? Could be a debtor. Kasi baka iniisip niya kung ang term na gagamitin niya is borrower, di ba? Baka yung law hindi siya mag-apply sa ibang contract like kasi kanina nga 'di ba nakita natin yung covered transaction, it also applies to a contract to sell or conditional sales contract. So mag-apply din siya sa buyer. So instead of enumerating yung borrower buyer ganyan, ginamit niya lang na term is yung persons to whom credit is extended. But you know, debtor is a good term for this. Now, what are the obligations of the creditor under this law? So any creditor to shall furnish to each person to whom credit is extended, okay? So a clear statement in writing setting forth to the extent applicable and in accordance with rules and regulations prescribed by the board. So basically, ito yung mga terms na dapat nandun sa kontrata. So number one, naka-highlight and naka-underline na rin. So the cash price or delivered price of the property or service to be acquired. Okay? Kasi pwedeng bumili ka ng, for example, bumili ka ng motor na hulugan, yung motorcycle na hulugan. So pwede kasing bilhin mo siya in cash or pwedeng installment eh. So there must be a clear statement in writing setting forth the cash price or delivered price. Okay? So the amounts if any to be credited as down payment or trade in. Okay? So this if in case of installment payments, yan. So magkano ba yung down payment? And third, the difference between the amounts set forth under clauses 1 and clauses 2. Okay? So yung difference between the cash price and the down payment. Okay? So what else? So tatlo pa lang, no? Cash price, down payment, and yung difference. So bilugan na natin. So next, the charges individually itemized. Okay? Which are paid or to be paid by such person in connection with the transaction but which are not incident to the extension of credit. For example, siguro nito yung mga shipping charges. Yan, kailangan individually itemized and must be indicated in the disclosure statement. Next, the total amount to be financed, and most importantly, the finance charge. Ito nga yung essence ng law eh. The contract must state the finance charge expressed in terms of pesos and centavos. So on top of that, expressed in terms of pesos and centavos, it must be also expressed in percentage that the finance bears to the total amount to be financed. Okay? So the term finance charge includes interest, fees, service charges, discount, and other charges incident to the extension of credit. Okay? So the lender may also provide for a penalty clause so long as the amount or rate of the charge and the conditions under which it is to be paid are disclosed to the borrower before he enters into the credit agreement. So, pwede naman maglagay ng penalty clause for as long as dapat ma-disclose mo siya sa borrower before he enters into the credit agreement. So, penalty charge which is liquidated damages resulting from a breach falls under item 6 or finance charge. So, yung penalty charge falls under item number 6. Okay, so we're done with covered and excluded transactions. Again, excluded transactions yung credit line for being a preparatory contract to a contract of loan. Now, what are the consequences of non-compliance with the obligation? Ang obligation kasi ng creditor, there are 7 statements, diba? From from the cash price all the way up to the yung percentage. So 7 dapat yung i-disclose ni creditor. So what if the creditor failed to disclose those items? Ano yung magiging consequences? So number one, any creditor who in connection with any credit transaction fails to disclose to any person any information in violation of this act shall be liable to such person in the amount of 100 pesos. So, or in an amount equal to twice the finance charge. Except that such liability shall not exceed 2,000 pesos on any credit transaction. Sir, wala naman pala tong pangit tong batas na to considering that the amount, yung civil liabilities amounts to 100 pesos or ito, equal to twice the finance charge. But mind you, the law was passed on June 22, 1963. So, yung 100 pesos noon, hindi na siya yung equivalent na 100 pesos ngayon. Okay? So, next statement. Ano yung next possible consequences for non-compliance with the obligation? So, any person who willfully violates any provision of this act or any regulation shall be fined by not less than 100 pesos or more than 5,000 pesos, or imprisonment for not less than 6 months nor more than 1 year or both. So as can be gleaned from Section 6, Paragraph A and Paragraph C of the Truth in Lending Act, the violation of the said act gives rise to both criminal and civil liabilities. Yung Paragraph C, this one, it considered it considers a criminal offense the willful violation of the act. So imposing a penalty therefore of fine, imprisonment or both. Yung section 6A on the other hand, ito, section 6A, it clearly provides for a civil cause of action for failure to disclose any information of the required information to any person in violation of the act. So the penalty therefore is the amount of 100 pesos or in an amount equal to twice the finance charge. Whichever is greater except that the liability shall not exceed 2,000 pesos on any credit transactions. So now we're done with the consequences of non-compliance with the obligations. So case study. So first case, we have the case of United Coconut Planters Bank versus spouses Samuel and Odette Beluso. So what happened in this case? The UCPB or yung United Coconut Planters Bank granted the spouses Beluso a promissory note under a credit agreement. So the spouses could avail from the former credit of up to a maximum amount of 1.2 million pesos. So later on, it was subsequently amended to increase the amount of the promissory notes line to a maximum of 2.35 million pesos. So the spouses availed of this amount, 2.35 million pesos. So nangutang yung spouses from UCPB in the amount of 2.35 million pesos. So, ito yung nakalagay sa promissory note. For value received, I and or we, on or before due date, spouses Samuel and Odette Beluso, the borrower, jointly and severally promised to pay UCPB, the lender, at UCP building, the sum of blank pesos, Philippine currency. So, ito yung nakalagay sa promissory note. With interest thereon at the rate indicative of DBD retail rate or as determined by the branch head. So, yung interest rate depends on at the rate indicative of DBD retail rate or as determined by the branch head. So, is this provision violative of the Truth in Lending Act? So, let's find out. The interest rate provisions in the case at bar are illegal, not only because of the provisions of the Civil Code on mutuality of contracts, but also, as shall be discussed later, because they violate the Truth in Lending Act. So, for not disclosing the true finance charges in connection with the extensions of credit is a form of deception which the court cannot countenance. So, it is against the policy of the state as stated in the Truth in Lending Act. So, this provision in the promissory note which provides that the interest rate thereon at the rate indicative of DBD retail rate or as determined by the branch head is violative of the Truth in Lending Act. So in order that obligations arising from contracts may have force of law between the parties, there must be mutuality between the parties based on their essential equality. So a contract containing a condition which makes its fulfillment dependent exclusively upon the uncontrolled will of one of the contracting parties is void. Rate indicative of DBD retail rate or as determined by the branch head is indeed dependent solely on the will of petitioner UCPB. Under such provision, petitioner UCPB has two choices on what interest rates shall be. So number one, it could be the rate indicative of the DBD retail rate. Second, a rate as determined by the branch head. So as UCPB is given this choice, the rate should be categorically determinable in both choices. So if either of these two choices presents an opportunity for UCPB to fix the rate at will, the bank can easily choose such an option, thus making the entire interest rate provision violative of the principle of mutuality of contracts. So moreover, while the spouses Beluso indeed agreed to renew the credit line, the offending provisions are found in the promissory note themselves, not in the credit line. So in fixing the interest rates in the promissory notes to cover the renewed credit line, UCPB still reserved to itself the same two options: rate indicative of the DBD retail rate and a rate determined by the branch head. So these provisions are violative of the Truth in Lending Act. The next case we have is the Bank of Philippine Islands versus spouses Norman and Angelina Yu. So in this case, the question is whether or not the reference to the penalty charges in the promissory note constitutes substantial compliance with the disclosure requirement of the Truth in Lending Act. So what happened? So what happened in this case? So in the disclosure statement, there is no penalty charges stated. However, in the promissory notes, uh, there are penalty charges provision. Okay, so is it allowed under Truth in Lending Act? So in this case, although BPI failed to state the penalty charges in the disclosure statement, the promissory note that the use signed on the same date as the disclosure statement contained a penalty clause. So dito pinayagan ng Supreme Court yung penalty clause. Although it is not stated in the disclosure statement, the same was the same was indicated in the promissory note. So what was indicated in the promissory note? I or we jointly and severally promise to further pay a late payment charge on any overdue amount at the rate of 3% per month. So the promissory note is an acknowledgement of a debt and commitment to repay it on the date and under the conditions that the parties agreed on. So kahit wala yung late payment charge dun sa disclosure statement, as long as it is stated in the promissory note, it constitutes a substantial compliance to the Truth in Lending Act. So in this case, there is no violation of Truth in Lending Act. So in another case, New Sampaguita Builders Construction Incorporated versus Philippine National Bank. So these are the principles under this case. So where the disclosure statements as well as the credit agreements do not provide for any increase in the specified interest rates, none would be permitted. Okay? So if sa disclosure statement walang nakalagay as to the increase of interest rate, hindi pwedeng mag-increase ng interest rates. Okay? So no penalty charges or increases thereof appear in either in the disclosure statement or in the clauses of the clauses in the second and the third credit agreement. So in this case, sa disclosure statement, walang nakalagay na increase in interest rate. Sa credit agreements, wala ring nakalagay as to the increase of interest rate. So, while a standard penalty charge of 6% per annum has been imposed on the amount stated in all three promissory notes still remaining unpaid or unrenewed when they fell due, there is no stipulation therein that would justify the increase in that charges. So, the effect therefore, when the borrower is not clearly informed of the disclosure statement prior to the consummation of the availment or drawdown, is that the lender will have no right to collect upon such charge. Dito sa case kasi, sabi ko nga kanina, walang nakalagay as to the increase of interest rate both in the disclosure statement and in the credit agreement. So therefore, the Supreme Court did not allow the collection of such penalty charge. So the time is now ripe to give teeth to the often ignored 41-year-old Truth in Lending Act and thus transform it from a sniveling paper tiger to a growling financial watchdog of helpless borrowers. So the very purpose of Truth in Lending Act is to protect the borrowers from hidden charges imposed by the creditors. So that, ladies and gentlemen, is my discussion for Truth in Lending Act.